Hello, my fellow investors, and welcome back to another update on my wife's dividend portfolio journey. It has been quite a few months since we did this last. I believe the last time we did this was back in November. So yeah, it's been quite some time. We're going to take a look at the ones for December as well as February and March. We didn't get anything in January because there isn't any companies that pay her dividends in January. But still, this is actually quite an interesting development because it's been quite some time since we've seen it, and now we get to see exactly how much things have gone up just by not doing anything. Literally nothing. So we're going to cover that today. We're going to go over, of course, the goals for any one of you guys who are new. There's a lot of new people on Rumble that have joined that and haven't realized that we do make this kind of content. We used to do it every 2 weeks. I think we're going to change it now, like just do it one time for like February and then March. And then like every other month that lands on the days that we have dividends. And of course, make sure to like, subscribe, comment. Really does help here on YouTube as well as Rumble. And follow us on X. With me, I have the owner of the portfolio, because it's not my portfolio, which is...
me.
My wife.
Yes.
My lovely, beautiful wife. Hi, sweetheart.
Hi.
It's been a while since we've taken a look at this, huh?
Yes, it has been.
So I guess the first thing that we want to just jump into is look at this graph that you're looking at right here.
Okay.
Okay, so this is on the year-to-date change. So basically, it looks at your portfolio from the first trading day of the year of 2024 to today. You're up $145.91.
Wow.
Very, very interesting.
And you said
right?
we haven't done anything.
Nothing. Now, this is also taking into account your personal, contributions. However, this right here shows your overall performance without your contributions.
Okay.
All right. So you could tell that on the year to date, because this is on the year to date, see January 1st, 2024 to March 2nd, which was yesterday.
Yes.
Right. We can see here that the beginning value was $621.37.
Okay.
So as you can see over here, the investment change, you have gained around $50 roughly. Just so far in 3 months, including dividends, including just capital gains. Ending value right now, it is $769.25, which includes the contributions this period for the month. Okay. Which, as you know, you are doing $25 every single 2 weeks.
Yes.
Right? So if you subtract this, you essentially have the fact that your investment change has been $47.88, which is your total contributions, which is your total capital gains plus dividends. That's your real portfolio. Okay? And if you take a look at this over here on the right, we can see the rate of return. And on the year-to-date performance, you are up 7.12%.
That's good.
That's actually amazing. So if you compare this to the Dow Jones, your line is the blue one. Mm-hmm. The Dow Jones is the orange one.
Mine is up a lot more.
Yours is way up a lot more. Compare this to the NASDAQ. This will probably be lower. Actually, yours is still higher. Look at that, sweetheart. Your portfolio is actually higher than the NASDAQ.
Yeah.
Which is really tech heavy. One of the biggest movers right now is the NASDAQ. It's upwards. It's upwards of, like, seriously, a lot just for the past year to date. So you're beating the Dow Jones. You're beating the NASDAQ. However, the main one that you really want to beat, it is the S&P 500. That is the benchmark. And we can see that you're slightly below it. Right. This one's really difficult to beat, not going to lie. Okay. But you're very close to it. You can see that the S&P 500 is up, 7.97%, and you're up 7.12%.
It's less than 1%.
It's less than 1%. So you're actually doing a whole lot better than my portfolio, honestly.
Wow.
So congratulations on that. And then we'll compare that to the Russell, which is basically small cap companies, the smaller, small to mid cap companies. Okay. You can see that you're massively up.
Yeah.
So you're beating 3 out of the 4 metrics.
Wow.
Seriously, that's really, really good. That's really, really good. So now let's take a look at your overall individual positions and how much they have gone up or down.
Okay.
Now, just your guess. Do you think that you're in the green on a lot of them or in the red for a lot of them? Just give a guess.
In the green for a lot.
For a lot?
Because it's up.
Okay, for a lot. So let's take a look at that right now. So for all of your positions, you are up. For every single one of them.
I was right.
Every single one of them, though. So the best performer that you have right now, it is AbbVie. You're up $24.53. Okay? You originally have $75.98, and you have around a little bit more than half of a share. Okay? The next biggest one would be Home Depot. You have 0.1744 shares. You put in $51, and you're up $16.05. Broadcom. This thing, you have 0.0297 shares. This thing has gone up such an incredible amount. It's ridiculous. I think I bought this for you at around, I don't even know. I don't even know when I bought this for you. I would have to check. But I think I bought this for you at around like that $400 mark, maybe $600 mark.
Wow.
And it's at $1,399.
It's gone up a lot.
It's gone up. This is, in my portfolio, this one has beaten Chevron with only less than 10 shares.
Wow.
Which is insane, right? So this one, you're up $15.57. T. Rowe Price, you have 1.429 shares, and you have invested $152. You're up $10.07. Chevron, you have 1.0217 shares. You invested almost $150, and you have $7.14. Southern Company, 0.4339 shares, and you're up $2.02. You used to be up more, but this one has come down a little bit. Utility sector is coming down a little bit, but still, you know. And then Apple, believe it or not, is actually your worst performer. You have 0.0841 shares, and you're only up 12 cents. It's actually gone down a decent amount. You see $179 right there. It's actually gone up a decent, gone down a decent amount because, well, Apple, ever since they came out with their Vision Pro, their stock just plummeted.
Well, they also had to switch all their new iPhones have to have a C charger now.
Right, because I think it was
they can't have the Lightning charger anymore.
I think it was like a EU regulation thing. That's the reason why. So
they're losing money.
So those are your main equities. However, you have one ETF, and that is in the form of SCHD. And you can see that the current share price, it is $78.15. I helped you buy one share of this originally at $73.46. You're up almost $5 in this one, $4.69. So yeah, your portfolio is doing really, really well.
It is.
Now, I have not bought anything because markets
it's all been up.
Correct. Markets have just been all the way up, and you know, it's just really difficult to find opportunities right now.
But then you have a good chunk saved up to spend then when a good one comes along.
So right now you have around $117.60. Yeah. All right. So that's including your contributions and dividends. In fact, your savings right now, your cash, makes up around 15.33% of your portfolio. Okay. So now let's take a look at the dividends that you've gotten these past few months.
Okay.
So here's where the fun actually begins. Now let's go over to actually 2023. We're already there. And we can see that the last time we did this, or at least I think I did this by myself. I don't think you were here. For the month of November, you did 85 cents.
Okay.
Okay, but for the month of December, $3.89 in dividends. Very, very nice.
That's
very,
good.
very nice. So, you know, we started doing this, I believe, in like May. It's almost been a year since you started investing.
Wow.
And, you know, you got your first dividend in June. So for the year, you made around $10.13, averaging 84 cents per month. Now, are you interested to know what this is going to go up to when you hit 2024?
I am.
All right, so 1013, that's the main one that you want to take a look at. Okay. So $23.90.
It's going up almost $14.
And look at that, almost $2 average per month. This is including the fact that, you know, obviously now we're getting all the months.
Right.
And also, a bunch of company has raised their dividends. Chevron raised their dividends 8%.
Okay.
So you just got an 8% raise on Chevron. Now, granted, this is pennies for your portfolio, but that's 8% without you lifting a finger.
That's nice.
That's amazing. So we just went from $10.13, 84 cents per month, and then 2024, $23.90 per year, almost $2 per month. And for February, you did 89 cents, right?
Okay.
Because you have cash, Charles Schwab pays you an interest for having cash with them, which ends up being around 3 cents. So total was 92 cents for the month of November.
All right.
Now for March.
March looks bigger.
Yeah. Some might say huge. Some might say huge.
Sure.
So for March, you are expected to gain, would you like to give it a guess?
$5.
$4.96.
I was very close.
Yep, with the interest.
Technically, it is right on $5.
With the interest, yes. With the interest is exactly $5. So there you have it, sweetheart. That's really good. You haven't even been investing for a year, and you're already making $2 on average per month.
Yeah, that's good.
Right? I've been buying these companies for you I'm trying to snipe them at a really good valuation.
Right.
Sometimes we may go months without it. Without buying one. Just keep accumulating cash. You know, I really wish I could buy some bonds, but bonds are usually increments of $1,000 to buy one bond, but it is what it is. We'll just have the interest coming in from your cash.
That's fine.
So yeah, for the month of March, you're expected $4.96 in dividends. I don't look at the interest because if I buy something, that interest will go away.
Okay.
But yeah, essentially $4.96, babe.
Essentially $5.
$5. So congratulations on that one. Now jumping over here to the spreadsheet. We already took a look at most of this, obviously, when it came to the Charles Schwab portfolio. But see how much these dividends have changed since the last time we saw them. This is the most updated one. This is what it was before. You can see that Charles Schwab fell from 3.5 to 3.4.
Yeah.
Okay. T. Rowe fell from 4.59 to 4.37. Chevron went up from 4.04 to 4.27. AbbVie went down from 4.02 to 3.5. Apple went up from 0.49 to 0.53. Broadcom went massively down.
Yeah, it did.
297, almost 3% to 1.5%. And we got over here Southern Company going from 3.95 to 4.2. My average dividend, my yield on cost for you, for this one, well, you can see it right there, 4.5%.
That's good.
So I would like to buy around this point again.
Okay.
And then for Home Depot, the current one is 2.34 and before it was 2.36, so that one didn't really move much.
Right.
And let's take a look at what Broadcom actually was when it came to your average share price.
Okay.
Because I'm very, very curious, seeing that it's gone upward of almost $1,400. So if we type in over here AVGO, this will calculate your average share price. So I actually bought this thing for you at $875.08. Up $1,400.
It's almost doubled in price.
$1,400.
It's close.
This is why in my portfolio, I own less than 10 shares of Broadcom, and it's upwards. It's up higher than that of Chevron. I kid you not. Chevron is up like $6,000 with 187 shares.
Okay.
Broadcom is up close to $7,000 with 9.15 shares. It's insane. It's absolutely crazy. So there you have it. There you absolutely have it. So what do you think about this so far? It's looking amazing, isn't it?
Yeah, it is.
Amazing. Now, for all of those of you who may be new, the reason why we're doing this is because, well, we had the idea she will eventually stop working. Right now you currently are.
Right.
But when we have kids, you eventually just want to take care of the kids, right? And you want to stop working. So with that, you will not have an income.
Right.
So there are things that you like to use.
Right.
Like subscription services that I personally don't want to pay for.
Right.
But I don't. If you're gonna be here home all day, you may want to use them on top of also streaming. By the way, guys, she does have a channel here on Rumble. Follow her. Her name is Mermaidy. I'll probably pop it up right here. So follow her. She mainly does family-friendly gaming, Stardew Valley, Pokemon Snap.
And Sims.
And Sims, which is her favorite. So make sure to follow her there. I'll leave the link to her channel in the description below, so pop up how it looks like right here. Again, if you guys got kids, make sure to follow her because she really doesn't curse. She really doesn't do anything. It's really, really chill. So aside from that, you want to watch some stuff. So we figured out how much all of these services cost. And basically, this is your total annual cost for all of these subscription services.
Right.
By the way, this is your, I believe this is for the entire year.
Yes, it is.
Okay?
And that would be if you paid for all of those every month.
Right, at the same time.
Yeah.
Which you don't do that.
No.
You usually
I normally just have one at a time.
Right. You usually put one in, then you cancel it, then you go to the other one. So
yeah.
This $815 is not per month. This is $815 per year.
Right.
Okay, so just FYI. So it looks a little bit overwhelming. It really isn't, right? Right now, you're upwards of what, $2?
Yeah.
Right? So look at that. You're already there paying for Paramount Plus and Discovery Plus.
Yeah, that's great.
At least one of those. And it's been less than a year. If stocks continue to fall, I'm going to keep buying. And guess what? You might actually reach this before June, assuming the stocks fall.
That would be great.
Which at this point, I don't know if it's going to happen.
Right.
But,
just depends.
Well, the tech sector is increasing, but there's other opportunities, right?
Right.
You have other companies. I could buy into REIT, but I want you to have the qualified dividends, so we're not buying REITs right now. I know a lot of you guys have been saying, buy this REIT, and this is like, I understand they have a higher yield, but we want to not have non-qualified dividends. We want to strictly have qualified dividends just because it's easier for taxes. So yeah, these are the goals. And right now, a year ago, it seemed like it was a lot farther away.
It did.
And now, companies increasing their dividends, me buying more. If stocks fall, I'm going to buy more. This will reach, if we take a massive toll in the markets, this will probably reach $10 by the end of the year. Assuming that it does, right? Assuming that it does.
Yeah.
So there you guys have it. This is the goals for her. And yeah, all in all, really, really great end of the year and beginning of the year as well. So,
yes.
So there you have it, sweetheart. With that said, guys, thank you so much for watching. Make sure to like, subscribe, comment. It really does help here on YouTube as well as Rumble. On my end, we are live streaming every single day, Monday through Friday at 7 p.m. to 9 p.m. Eastern Standard Time on Rumble exclusively, since we did get the partnership program. And of course, make sure to follow us on X to figure out when those live streams come out. It's usually 7 p.m. starts, right? But also when videos come out, and of course, anything that Mike and I may talk about. And of course, one last shout out, make sure to follow her channel, Mermaidia Plays, here on Rumble, only on Rumble. And where, again, she mainly does family-friendly gaming, all right? So if you guys got kids and you want them to see family-friendly gaming that isn't shooters or anything like that, make sure to follow her there. So thank you guys so much for watching. Peace out, and we will see you all next time.
Bye.